All right, everybody. Welcome, one and all. Hope you're having a great day. Welcome to Technical Analysis with Robert Roy from WealthBuildersHQ.com. Hope it's been a good day for you, good trading day. Last week, we went over and we talked about the bias of a stock. And the bias, if you haven't watched that show, you should go back and watch that one to give you some context. But just to give you a brief overview, bias basically says, what is my bias personally when I look at that stock? But I don't want to have it be opinionated, meaning, well, today I guess I kind of feel like this. No, it has nothing to do with it. It has everything to do with the relationship of closing price, the three moving averages, and the order that the three moving averages are in. So as an example, if I go ahead and let's try to pick one that is a little bit easier to discern. Costco. We'll go with Costco. Costco right now is in a bullish bias. Why? Price is above the highest moving average. I have four moving averages on the screen, three of them that we primarily use. We use the 8, the 21, and the 55, right? 8 is pink, 21 is green, 55 is brown. So we are above the highest one, which puts us at a bullish bias. And we have all of our three moving averages in the right order. So that is what I would call a true bullish bias. If the moving averages were messed up, I'm going to use that as an aggressive entry and maybe take less contracts or put less dollars in the trade. Okay, so that's bias in a nutshell. Rank, just because it's bullish, it doesn't mean it's a good trade. Just because, if we look at the indicator in the center here, it's called DMI. DMI is along with ADX. So if ADX has to be above 20 as a bare minimum, to choose that as a indicator or a signal to say, yes, I like this. The ADX tells me the market's trending. I could take a trade on this. I use 25. I've got a horizontal line snapped at 25 here. Okay. Well, right now, ADX is at 17. It tells me there's not enough of a trend for me to take the overall trade. Now, granted, we've had an overall bullish move, stepping up, but we're getting this lower high in there now, and we're kind of failing off. So ADX is not giving us a strong signal, right? DMI plus says if plus is higher than minus and plus is also above 25, then it says we could take a bullish trade. So the numbers give us indications, but just because DMI is, or rather ADX is up above 25, it's not here. But just because it would be, that doesn't mean we can go ahead and take that trade. And it's no different that just because bias is bullish, that doesn't mean we take the trade. It has to be the right setup with the right purpose. And that is where rank comes in play. So let's go take a look at Coinbase as an example. So Coinbase right now, if we look at it, we're in a bullish bias. We're above the highest moving average, which is the 55. That is not the way I want to see it. I want these moving averages to be almost completely upside down. I want the 8 on the top, which is the pink. You can look at the numbers up here. Pink, 8. Brown, 55. Green, 21. Right? You can see, and they're all exponential. All four of these averages that I use are exponential. The 5 is a moving average that's used only for a very specific trade setup. So don't worry about that for here. It's a swing trade indicator for exiting our last set of contracts that we're in, which is usually 1 or 2. So we're in a bullish bias. So does that mean that I can take a bullish entry? Well, maybe. Okay, maybe. What do you mean? Well, if we look, we closed very close to that fib line. So that gives us a bullish bias above the 55 and a rank of 1. What does that mean, a rank of 1? We're very close to that moving to the fib line, and the moving average is right there. So we've got a rank of 1. Well, that rank of 1 would tell me if I'm bullish on this and I like this stock and I like the overall market and I'm willing to take on bullish trades, then this would be the one for me. I would go ahead and say this would work. Now, I still need rules in order to take the trade. It's not just, well, it's bullish, so let's jump in. No, it doesn't work that way, right? I would need in an ideal world, I move and I close up above the fib line. That's ideal. And then tomorrow, I would pull back and retest and bounce and take the trade off of the bounce. That's an ideal scenario. Doesn't mean you're going to get it all the time. Doesn't mean every one of you are going to trade it that way. It's just the way that I like to trade these, is having that bounce, in there, and then and only then considering to take that trade, right? So let's look at a couple of other symbols, and let's look at bias and rank and see how they line up so we can kind of practice this a little bit. So on Omega Charts, which is our proprietary charting software, we're going to use, let's go to Alibaba, BABA. All right. So if we look first, let's scroll in on this, zoom in. Right? We have had massive, massive moves to the downside. Okay. On Alibaba. Let's keep going. Yowzer. Okay. I actually like it a lot for a bearish entry, right? But how? Why? What is the bias? The bias is bearish. Is it true bear? Yes. What is my rank? Well, I'm nowhere near a moving average, so I can't be a 1. To be a 1, the moving average and the fib line have to be right on top of each other, or right near each other, close. If I am near a fib line, but not near a moving average, that's a rank of 2. So what does that mean? Well, if we would have closed on our candle, let me just change this drawing tool over to something a little bit more solid. Let's, can we do a rectangle? No. Let's see. All right. So it's not letting me grab a rectangle on this one. It's an older version of the software. But let's say that I closed right here. Right? That was my candle. I closed there. And we are underneath the moving average. Let's say we're right at that moving average. Doesn't really matter, but we're close to it. Well, now my closing price is near a fib line. My moving average is near the fib line. That's a rank of 1. So this becomes a very easy decision for me. If we were to move down, and ideally I'd rather see it move up first and then move down. Why would I want to move up first? The bulls attempted to take control. They ran up to a resistance level and they failed. Once they failed, that is where the bears start to shine. That is also where things like implied volatility will start to kick in and increase potentially. Bid-ask spreads may get a little bit wiggy on it as the markets roll over there. And that's the market maker trying to get his or her footing on the ground, saying, all right, is this real? Are we really failing at this point? If we are, great. I just don't want to give a trade away. And we had this really tight bid-ask spread. And just because the market made a quick move in one direction or another, they get their head handed to them on a trade or two. So they'll open the spreads up a little bit to offset that. And this is right out of the American Stock Exchange, the options exchange floor, where I was there for what was called Trader for a Day many decades ago, where you met with floor traders, market makers, the owners of the market maker firms, executives from the Amex and so forth, and did a mock trading session in there. And you got to ask questions. And all of mine were technical as a trader, not how does this board work or anything, but technical as a trader that said, you know what? If I'm trading against you, because that's really what it is, what am I looking for? You know, and that's I didn't ask him that. I didn't ask it that way, but that was the way I posed my questions. How do I combat what you're doing as a trader? And that's how all my questions were positioned, were poised. And I went with, probably 20-ish questions in mind to get answered before I left. And they did a little cocktail session afterwards where they had drinks and hors d'oeuvres, all included. It was all free, by the way, all included, and give the market makers a couple of cocktails and they'll spill their guts on anything. At least they did that night. So I would want to then take that trade as we rolled over right there. But that gives me a bearish bias. I would be willing to do a full allotment of a trade. What does that mean? For some of you, that might mean a number of contracts. Maybe that means 10 contracts. For others, maybe that means $2,000, $10,000, whatever your full allotment is in a trade. We're going to make the number up here. We're going to say your full allotment is 5 contracts or $5,000. Either one, depending if you do dollars or contracts. I teach in contracts because it's easy math, but I trade in dollars because I do equal dollar trades. So if you had a $2,000 account, maybe you want to do 3 or 4 equal dollar trades. Let's say it was 4. So each trade you did, you'd put a maximum of $500 into that trade. Oh, well, Rob, that doesn't give me a lot of choices. I know. It doesn't matter if it gives you a lot of choices. You got a $2,000 account. Go after Tesla. Go after APP. start putting $15, $16 down in one option, $1,500, $1,600 on one contract, and it goes against you and you get your head handed to you, you got nothing left to trade with. So I get it. It may not be much. You don't need to trade those high price stocks. So that would be a normal contract. A normal trade would, let's say, for a $2,000 account, but we're talking $5,000. So the $5,000 account, maybe I'm going to put 4 or 5 equal dollar trades. We'll say 5 because math-wise it's easy. Gives me $1,000. Okay, so each trade is going to be $1,000 invested. So if I am doing a full trade up here, I'm going to do my full $5,000, however many contracts that is. 1, 11, 116, whatever the number is, $5,000 is going into that trade, or actually we said 1,000, right? 1,000 is going in that trade, whatever that number of contracts comes out to be. Okay, it doesn't matter. We're doing it off of dollar. But with where we are right now, I would have been in a rank of 1 at the previous box I had drawn. But where we are right now, I'm at a rank of 2. That is what I would consider an aggressive entry. I need the moving average there, ideally, as a confluence. The moving average and the fib line. So if this side of the world or trading arena focuses on moving averages, they're looking for that moving average to take a trade. If the ones that are on this side of the trading arena are focused on lines, whether they are fib lines, horizontal support and resistance, whatever it is, zones, they're focused on that. It takes them to see that first before they take the trade. Well, now when both sides of the arena come together, that's the eclipse, right? The sun and the moon getting in each other's ways, okay, or one other's way. When they get together, now I would do a full alignment. But if we don't have that togetherness happening here, right, where we all love each other, right? We don't have that togetherness. I'm going to do an aggressive entry. And if I were doing contracts, I would do 10 contracts as my example for a full allotment. I would do 4 contracts as an aggressive trader. If I'm doing $1,000 in the trade, maybe I'm doing $400 as the dollars I'm willing to put in the trade. Now, on Alibaba, that may mean that I can't find a contract to trade. I may look at an option and go, nope, just not there. Can't trade it, right? It's very possible. That's very possible. Okay, I don't know. But all that means is Baba's not a stock for me then. Go find a different stock to trade. Go find a different sandbox to play in. You don't have to trade them all. Hell, if that's the case, just trade booking. It's only $100 a share. Go trade that one. Why? There's no reason for it. Forget about low volume, low open interest, huge bid-ask spreads, right? Yeah, just because it has an option doesn't mean you have to trade it. Just because it's setting up as a pattern doesn't mean you have to trade it. Right? So let's go look at MasterCard. So MasterCard has moved up into what would be considered a bearish neutral bias. We're above the 8, below the 21. We're bearish neutral. We're sitting in a rank of 1. So could I take a trade? You could, but I don't want to take the trade to the downside. I've got an obstacle course happening here, which is where I like to look at it. Do I have, and here's a phrase, write this down, please. If you don't know this, write it down, put it on a sticky on your monitor, and use this as a phrase to live by. Do you have a clear and concise entry? Let me explain that. We're going to start with concise, okay? Concise would be, do I have the right setup? Am I sitting near a fib line and a moving average? Yes. Is the market rolling over today? Yes. Well, that means I've got that concise or precise entry point to consider. Now, do I have a clear path to my next level, which is down here? And the answer is no. I've got the 8 moving average in there. Consider this an obstacle course, or you just had a bad storm. You got down trees. There's garbage cans blown around in the street. Electrical wires are down. This could be an electrical wire. Doesn't mean you can't get around it, but you probably don't want to drive over it and have that sucker touch your car, right? With that, I'm going to look at it and go, yeah, not for me. But if I can get a bounce, a breakout and a bounce, let's say the S&P starts moving up tomorrow. The stock moves up. Who's in control? The bulls. What do I want to see happen? I want the bears to try to take it back. I don't want the breakout. I am not a breakout trader. I'm not saying breakouts don't work. They just don't work for me. And if you look at when we break out of levels, how many times we break out and fail right behind it. right? But if we break out, come back and retest and bounce, we make it up to the next level. Higher probability of it anyway, okay? So the bears are trying to take it back over, pulls back, and now it bounces. If it does that, that gives me a clearer entry to a bullish entry, right? Clearer bullish entry. Why? Because that setup is coming down to a rank of 1, right? Where we've got a moving average, and those moving averages to give me that rank of 1 are only the 8 and 21. The 55 is more of a me too. And forget about the 5. We don't care about that for this type of setup. Only the 8, 21, and 55. 55 is longer term direction. Keeping in mind that I am more of that day trader. Swing trading, as much as I love it, and I would much prefer to be a swing trader. I don't like that I've got to be looking at the market every single day. I would much rather get in 2 or 3 trades in the beginning of the month and have them set up for a couple of weeks and let those move, and those are my month. I don't need to have 1 or 2 or 3 trades a day to define what I'm looking for in my trading. As a day trader, that's exactly what I need to do. I need 3, 4, maybe 5 trades in a week, whereas a swing trader, I need 3, 4, maybe 5 trades in a month is all. So once this happens, we take that bullish entry, and then we've got resistance up here with our next fib line or zone if you're using zones like Brandon Wendell, one of our coaches at Wealth Builders, or if you're using support and resistance, if you're using Bollinger Bands to help you make that decision, parabolic SAR, whatever it is, whatever your indicators, your setup is, that's what we're looking for there, okay? So let's go look at another one. This was MasterCard. Let's go look at an easy one like a Home Depot. When I say easy, they're not a volatile stock, lots of movement going on to them, gapping down around their earnings. That's expected, right? So where are we right now? Okay, well, we're sitting at a bearish bias, and we're at a rank of 2. We're near fib line, but we're not near a moving average. We are not in a true bearish bias. We do have the 8 as our lowest moving average. I like that a lot compared to what some of the others have looked like, but we're not there yet. So if I were going to take this, I would only take it bearish, and I would only take it as an aggressive trade, meaning I'll take this with a smaller number of contracts, 4 contracts, 1 contract, $400 versus $1,000, whatever the numbers are. And you need to define that. And you should do that today. You should look at your total account value and say, I'm going to take that account, or if you have a larger account, well, let's do it this way. Let's say you have a $2,000 account, like I said earlier. It's not like you could say, well, I'm only going to ever have, X in the market. You only have $2,000. So could you say the most I'll ever have in the market at one time is 1,000? Yes, you could do that. But if you've got a $500,000 account, you can't just go, I'm going to do 4 equal dollar trades or 5 equal dollar trades, $100,000 per trade. You could do Tsubatsu in the head, but you could, right? I am not an advocate of that. Someone with $100,000 in an account, can they get away with trading $20,000, $30,000, $40,000? Yeah, you don't need to put $100,000 at risk, right? Especially on an option that expires, and especially since most of my options expire Friday. Okay, which from when we're doing this live show is tomorrow, because we're doing it on Thursday afternoon at noon, 12:30. So I don't want to put all that money at risk. So, and again, that's as a day trader or as a swing trader. I guess that really doesn't make a difference. But if we can get a move up into this fib line and a failure off of there, now I've got a potential bearish entry. I would do it as a more aggressive trade, right? If we look at a Goldman Sachs, we recently had a good trade come off of Goldman Sachs in our power option plays training. So, I love this one. Okay. And when I say I love it, for a teaching example, where's my moving average? Very close to the fib line. I like it. Where's my closing price? In the middle of nowhere. That means we have a rank of 3. So if you do not have any supporting material around it, a fib line and not an or, and a moving average. So the fib line by itself is fine, or the fib line with the moving average. If you don't have that and you're in the middle of those 2 lines in there, that's a rank of 3. That basically says next, just pass on that candidate until it gets closer to a line, and then we'll come back and look at it, right? I don't need to trade Goldman Sachs every day. Actually, although it's in our power option plays training, and it's one of the 20 stocks that we look at day in and day out, I don't do well normally personally with Goldman Sachs. It just doesn't suit my risk profile. I don't like it as a trading company. I sure the heck don't like it at $900, right? $867. I'm not a fan of it at that price. I didn't like it when it was $400. Okay. We trade it because it fits the model of what we look for in that training. It's not all about what I want to trade. It's about what's best for everybody else. Goldman is a good company. It's not one that I use. It's like saying Fibonacci is a bad indicator. To me, it's not. To somebody else, it may be. Right? I don't use RSI. It doesn't mean it's a bad indicator. Brandon Wendell, I mentioned him before, one of our coaches. He's a CMT, a chartered market technician. Right? He's a PhD in technical analysis. He loves RSI. He's a master of it. He uses it with absolute precision. For me, it just doesn't work. Right? Doesn't mean it's bad. You've got to find what works best for you. Let's go look at one or two more. Let's go look at American Express. So definitely a much less aggressive company until you get one of those wonderful letters that says your account's been hacked. So if we bring this in, then it's more aggressive, right? Or maybe it's me being more aggressive once I find out my account was hacked. That's what it is. So moving average is doing in the right order. So we are in a bearish bias, and it's a true bear. I love it, but we're nowhere near it. So we're at a rank of 2. So could I trade this to the downside if it rolls over? Yes, but we're going to take it as an aggressive entry rather than a standard entry. Okay. And bottom line is that's all we're looking at here, right? How do we define where the stock is in relation to price and in relation to key levels? Now, those key levels, I use Fibonacci. You might use support and resistance, as we said. It may be near a 100-point level. Maybe there would be a level down here at 300. Okay. Maybe we're near that 300 level. That could also be part of your obstacle course, by the way. If it's between some of the fib lines you're looking at, that could be part of an obstacle course where, it's just a little bit harder to get through. Every time you've got a downed wire, a tree down, garbage cans have blown over, whatever it is, a car door blew open and no one closed it, and you can't really drive around it very easily. It just makes it that much harder as a trader to trade that one. So why bother? Go find a company that fits all the other criteria, say next, and just move on to that company. All right. So I hope it was helpful. With that, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, you're just one trade away. I will see you all on our next show. See you then. Have a great day, folks. Bye for now.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.